All right, let's talk about simple versus sophisticated investing, because a lot of people actually say, investing is really difficult, you gotta learn for years and so on. But honestly, it couldn't be further from the truth. Just look at Apple. One reason for their success is because they actually simplify difficult things, right? They make it super simple and it shows the success. So honestly, I think the same is true for investing. Too many people unnecessarily overcomplicate investing. Honestly, it's pretty straightforward actually, but of course, it's very nice to sell courses, day trading, etc. But the real measure of success in investing actually, for me, in my eyes, really goes back to how well are you doing versus the S&P 500. So these are the 500 biggest companies in the US. And honestly, if you manage to outperform them, I think you're a great investor. But the issue is with all those sophisticated traders, they might outperform it 1 year or 2 years. But if you look at the track record over a 5, 10 year, 15 year period, hardly anyone actually outperforms them. Even big funds often underperform them. Plus, more importantly, what the difference here is, with all these expensive, sophisticated traders, they actually charge you quite a high performance fee or management fee, which can really eat into your profitability. And that's why I'm a big proponent. If you're just starting off, or even if you're an established trader, go for an ETF, low-cost ETF, something like a VOO if you're in the US, or a VUSA if you live in Europe, basically, which mimics the S&P 500. It has a 0.07% expense ratio, which probably makes it one of the cheapest ETFs you can go for. And the great thing, what I love about simple investing, is it's essentially set it and forget it. You're just gonna dollar cost average every single week or month into it, and then we'll just start compounding over time, and you don't have to worry about it, and you'll be able to eliminate human emotion, because that's actually the biggest thing that holds you back from being a successful investor a long time. Because that human emotion, when we read the news of things going up or down, we want to invest more or sell all the stocks, and that's exactly where you're going to be materializing your biggest losses, because human emotion is real for all of us, right? Nobody's perfect. So when you have a set it and forget it method that is simple, pretty straightforward, you're much more likely to stick with it and not follow the latest trends. I mean, the same happens to me when I read about some new investing strategy. I'm really intrigued because obviously I'm very excited about investing, but often it's really important to stick with your chosen strategy and go for it in the long term. And that's why I'm such a big fan of dividend investing, because even when the markets are down, which they have been for quite a while now, I'm still gonna get paid a passive income every single month, quarter, or on an annual basis. And that's great, because even if the stock price is down, I'm technically in a loss. Obviously I'm not selling, so I'm not really realizing any loss, but I'm still getting paid income, which I can then either reinvest or actually live from it, right? And the longer I do it, it starts compounding and growing over time. And that's the beauty of dividend investing. Now again, even here you could say, how many stocks should you have? And that's a good question. Here you can make it super complicated and own 100 stocks. Some people build their own ETF by having so many stocks. Honestly, for me, it's just too difficult. I don't have the time to follow all of them. And I want to invest in something that I understand, that I know the numbers of, etc. So the ideal sweet spot that people say is around 20 to 30 stocks. Currently, I have around 12 in my portfolio, but it's really up to you, but something that you feel comfortable with. And again, that should be simple, because honestly, if it's more than 50 stocks, I have no idea how you plan to keep up with it, unless you want to be a full-time trader. But if you have a job like I have, then honestly, it's too difficult to keep up with it. And once again, I just want to simplify as much as possible. And another point where I simplify and automate my investing journey is that at the end of the month, whenever I get my salary, transfer a certain amount to my investment broker. And from there, every single Monday of another week, I have a reminder that goes off, and I go into my portfolio and I buy the stocks that I already have, because obviously I've already done my homework on them. Then I look at which of those stocks is closest to the 52-week low. And yeah, then right in there, I execute the order, buy the stock, and that's it, right? So really straightforward. I try to automate as much as possible to take out the element of human emotion as much as possible. And then on a quarterly basis, of course, I go into my individual stocks, do a bit more deep dive analysis and see how things are going. If I'm still really behind that stock or company, if so, great, I'll continue. If not, I might sell my position and move the funds into something else. But again, that makes it very simple and very easy to not have to spend too much time on that, because honestly, I can tell you, you're just gonna get all over the place. And in the end, if you see the numbers going red, start selling, which is the worst time to sell. And yeah, so just keep it simple. I really believe in that. And let's be honest, how many successful day traders do you actually know? Most of them, they might do well for a while, but once again, in the long term, they might actually risk it all, lose most of it, and then eventually go back to normal investing. And just look at people like Warren Buffett. Yes, you might call him boring, but it's arguably one of the most successful investors in the long term, right? And that's what makes the difference. He became one of the richest men in the world only after being 60 years of age. That just shows you the power of growing your portfolio over time. Of course, you could have a money manager, and a lot of the banks are offering wealth management, right? Sounds amazing. They should know what they're doing. But once again, the problem here is they're going to eat into your fees. And do me a favor, next time, if you're really serious about that, Ask those guys, show their results versus the S&P 500 over a period of 5 or 10 years. I can guarantee you they will underperform you because they promise you the world, all the upside without the downside. I mean, guys, it doesn't work like this. Nobody can guarantee you the upside without the downside. There's always a catch to it, and most likely it's going to be outrageous fees. There might be hidden fees that they don't obviously show you with a low expense ratio, what have you. But for example, some of them charge you a portfolio fee of 1 or 2%. So if you have a return of 6% annualized, you take out the 2% management fee, all of a sudden you're only down to 4%. So that's really starting to eat into your profitability. Of course, I get it. I also try new things, investing into P2P loans. I bought cryptocurrency, still have them, as well as real estate. But definitely investing is not rocket science. You can definitely take ownership of your own financial future. Just don't follow what other people tell you because they always want to tell you what is in their interest. Don't follow what I say. Do your own homework. Obviously get inspired by people, YouTubers, bloggers, books, etc. That's great. But ultimately do your own homework, do your own due diligence and make your own decisions. Try to stay away from products that you don't understand because probably if you don't understand and can't explain them to somebody else, probably they're not good for you anyways. I mostly want to invest in companies that I understand. I can project their revenues, their net profit, their income, and based on that, I can put a price to it and obviously then decide, do I want to buy it or not? Pretty simple, isn't it? Hope you enjoyed the video. If you did, give it a like, subscribe to the channel, it means the world to me. As always, stay healthy, get wealthy, and I see you in the next one. Ciao.